So yeah, so I try to make hyper Bitcoinization happen. I do Bitcoin education and one-on-ones. Um, and what's funny was I went to this bar EVR because I heard they were accepting Bitcoin.
A little closer, please.
Yeah, I went to this bar in New York City, EVR, because I heard they were accepting Bitcoin. And I paid Bitcoin for some drinks, and part of the reason was I brought a friend of mine who thought, no, Bitcoin's not, it's not real money. You can't do anything with it. And it's like, okay, well, here, look, this is money. You can buy something with it. And then it turns out Charlie here was involved with that. If you want to introduce yourself.
Hey guys, I'm Charlie Shrem. Yeah, so that bar EVR, thank you. We were that's actually where I met my wife, my girlfriend at the time. You were just doing the first Bitcoin transaction. And like you said, the idea behind accepting Bitcoin at EVR was that we were running the earliest Bitcoin exchange called BitInstant. At the time, you just had kind of Mt. Gox and these larger places to wire money to that were complicated. And in 2011, we launched BitInstant, which made it really easy for people to buy Bitcoin with cash at millions of locations. But our investors were like, we don't understand who is buying Bitcoin and why are they buying Bitcoin? And I couldn't really answer that question. So I said, we'll just be the first place in the world really to accept Bitcoin in a physical place. And you'll see the people that come. And thousands of people, like I think that bar, we stayed in business just because of people just came to pay in Bitcoin.
Yeah, and I think certainly in the early days, people thought, okay, maybe this is going to be outlawed, or certainly the government wouldn't like this. But what we've seen is now there's been a shift. Certainly, you have more people that are going to be in important roles in the coming administration that own Bitcoin, that are pro Bitcoin and so on. So what do you think about how that shift has played out?
And we saw last night, just during the crypto ball, there was a crazy crypto ball in Washington, D.C. All the who's who of Bitcoin and crypto were there. And then at the same time, literally on that spot, our incoming president launched a meme coin called Trump. That's a $30 billion fully diluted value. Now, if you look at all of that, if it's all crap, at the same time, all those people are now onboarded to Bitcoin. And they understand that Bitcoin is something really important to them. People know what these meme coins are, and they know that they're meant to be fun and art and games. But they understand now that Bitcoin is something to be taken seriously. And the new incoming administration, we got 4 years, but really got 2 years of make it happen. It's like shit or get off the pot. If you have a good business idea, if you said I needed to buy some Bitcoin, this is the time to do it, because the next 2 years you're going to see a quantifiable explosion.
I just want to give everyone on the panel a chance to introduce themselves. So starting with Christopher.
Christopher Alexander. I work in crypto and Bitcoin, I guess you could say. My background was in government and public affairs.
Well, you guys met me earlier, but I guess I'll share a quick cool story I have here with Charlie. I want to know, actually, if you remember, in 2018, during the bear market, you pulled up on a beautiful yacht to this restaurant called Green Flash in
Oh, yeah, in Captiva.
I said, "Are you Charlie Shrem?"
I remember that.
No. And I said, "Well, that's too bad, because this guy's a Bitcoin OG." He goes, "Hi, I'm Charlie Shrem." I'm like, this is crazy. This is crazy. Never.
At the time, you weren't worried. Bear market, people come after you. You get scared. Bitcoin now, everyone's really happy, but it's like, I lost all my money in Bitcoin.
I showed him my portfolio, and he goes, "What the hell you do working here?" I said, "I know where Bitcoin's going."
Oh, yeah. And what happened after that?
I don't work there anymore.
Mm-hmm. That's an epic story right there.
Okay. And Xander at the end.
Yeah, hello everyone. My name is Xander. I work right now on a project called Hoseki. So my career has been in Bitcoin has been focused on institutionalizing different use cases, whether it's payment rails, whether it's proof of reserves, so that not only is your money, whether it's self-custody or an exchange, we're focused on making sure that the custodians are held accountable and not just trust, but also verify. So the full stack from everything from Lightning all the way through to now institutional use cases, ETFs, and everything in between.
Yeah, I once ran into the Winklevoss twins on the street, and they tried to pretend that, it wasn't them, but it wasn't very believable. Right. It's just other, 6'5" twins, of course. Yeah. So, yeah. So CJ, yeah, you talked about in your presentation before a little bit about Bitcoin bonds, right? So, I mean, this can go to you or anyone on the panel. Like, what do you think is the exciting thing about Bitcoin bonds, right? Because bonds are generally not thought of as that exciting.
For
But
good
how
reason.
does adding Bitcoin?
Yeah, I mean, because if you're in bonds, you're losing purchasing power, right? It's that negative real rate of return problem. But what I think is so interesting is that, and this might ruffle some feathers, but I think the best Bitcoin L2 is actually dollars. And when you have currency and you use it with money, Bitcoin being the money, fiat dollars being the currency, this special magic event happens where all of a sudden you can borrow these devaluing currency units against your increasing in value money, and now you're getting paid to spend your Bitcoin. So this dynamic is something I think that the industry, we just need to hijack the dollar is basically what we need to do, because it's already a fully built and integrated infrastructure into everything. So Charlie was talking about how he set up a place for people to come spend your Bitcoin. My position is never sell your Bitcoin. Simply borrow crappy fiat trash against it and get paid to spend your Bitcoin.
I would add, I think what's also interesting at a macro level, the creation of, or the expansion of bonds is a crucial kind of derivatives expansion for Bitcoin. Retail investors, everyone here got Bitcoin to a point.
Yeah.
Retail investors have retreated. ETFs have come in. They brought more money in. Should you pay BlackRock to buy Bitcoin for you? Unless it's a tax advantage, I'd probably say no. But I think it's exciting because once you have an ability to hedge, then you can bring in massive institutional money, because you can't go brief Jamie Dimon and say, well, it's going to go up and to the right and I'd like to spend $50 billion on it, right? You have to be able to hedge. And that's one of the things that I think is great about bonds.
I could tell you, one of the things that's happening right now, we're getting a lot of knocks on our door, especially what's happening in California and with the insurance companies. They're taking all of these premiums and they're putting it into U.S. treasuries that are yielding a negative real rate of return. So the cost of replacement for real estate is far outpacing in growth versus the actual yield on the debt product. So the entire business model is going bankrupt. They need this product. They need a product that's going to deliver a real rate of return. And what it allows for is long-term business planning. So I think this is just a natural evolution of what was a boring market. Now with Bitcoin being integrated becomes exciting. And it actually, that Bitcoin fixes this saying, takes a whole new meaning.
How big do you think the market for these Bitcoin bonds could be?
It's at minimum 300 trillion.
Yep. All right. Yeah. Trillion here, trillion there. Pretty soon you're talking about real money, right? Yeah. So also in the space of never selling your Bitcoin, right? Well, if you never sell or spend your Bitcoin, then what's the point, right? Then you can watch that number go up, but then you can't do anything with it. So some people have said, well, you can borrow against your Bitcoin. Bitcoin is the collateral, because if you borrow, then you don't have a taxable event, right? But what we at least have seen is that a lot of the companies in that space have had problems, right? In the last bear market, a number of major companies have failed, some seemingly more legitimate and some less. So do you think that we're getting to the point where this can be a mature market and we can do this more?
Yeah, because what's going to happen is we're going to get rid of fractional reserve banking. That's the problem. The misunderstanding right now is that banking is evil, but banking is not evil. It's the fractional reserve banking business model that's evil. Should businesses not be able to borrow against their cash flows? I mean, that's a ridiculous concept. You can only spend, you can't borrow. There's no form of credit. What we need is non-fractional reserve banking backed by Bitcoin. And when you get into a commodity credit market, what happens is you are forced to have the destructive part of the credit cycle. That's our problem right now. There is no destructive part of the credit cycle. It's too big to fail. So we got to print. And what happens, we end up, forget about the zombie companies. We're in a zombie economy. That's the problem. We need destruction. We need mismanagement and over-leveraged people to be erased, to be destroyed. Sam sold some paper Bitcoin, but when the chickens came home to roost, he was destroyed. He was removed, and we built from a stronger foundation. Right now, we can't build from a stronger foundation because of this too big to fail fractional reserve system. We can keep banking, but let's get back to a commodity credit market that creates a healthy credit cycle where we can get the full rotation, which allows us to build from a stronger, healthier standpoint.
Absolutely. Yeah, because I've seen some of the companies that got into the space where you can borrow against your Bitcoin. Right now, they're talking about charging 14% interest, which is pretty astonishing. That doesn't really seem to match with pristine collateral, right? So, what do you think will that market will look like when maybe more people come in, or even maybe when TradFi starts competing in that space?
I think that the big problem with TradFi is your traditional bankers, the first thing they're going to do is rehypothecate the Bitcoin. And that's what caused the problems with all these other lenders. Not only were they charging ridiculous rates, probably because they were partnered with some liquidity provider and were arbitraging the difference that they were borrowing at and then lending to you, but then in the background, they had the audacity to take your Bitcoin and put it at risk. Well, at People's Reserve, we don't believe in that. We have multi-sig set up with qualified custodians and to make sure there is no rehypothecation at all. There's no need for it. And it's just a Bitcoin maxi mindset versus a fiat maxi mindset. That's what it really boils down to.
I think there's a second component to this as well, and fortunate that we have a new administration coming in. There's going to be, it is the number one mandate from the administration, clear rules for industry. I don't know how many programs have failed now because the SEC deliberately refused to make rules and continued on this regulation by enforcement regime, which really just means they would come to you after you did something and you talk to them about whether you could do it or not, and then say you just committed an ex post facto crime and now we're fining you. That's what they did over the entirety of the Biden administration. They did it a little bit before as well. But the point is, banks, the TradFi folks aren't being made afraid to work with Bitcoin by government now as they were over the past 4 and kind of 6 years. So I think that's another huge opportunity for everyone, less lawyer bills and more innovation.
Xander, any thoughts on that?
Yeah, I think, what started even when the ETFs are coming out, and there's all the debate when and how it's going to look, is it going to be in kind or in cash redemption? So when those came through the channel, I think what that sparked for institutionals coming on board and being able to now get into things like we're talking about collateralizing Bitcoin for, institutional bonds, retail bonds. I think this is just the beginning of where it's going to go, and love what you guys are working on there without the rehypothecation, because again, that's just taking a Bitcoin bond and then essentially allowing institutions to leverage it and do the same simple math that they're doing to make profit they've done, in the modern financial era. So starting with the ETFs, I think there's a lot of orange pilling that has to happen at the institutional level. You think of things like Coinbase owns 90% of institutional Bitcoin. That is a huge key man risk. So a lot of the things that we focus on is making sure that these custodians are not just rehypothecating, trying to make them honest and not only protect the institutional use cases for other businesses, but also you as a consumer. If you're going to park your money at all, I mean, everyone, go cold storage, go crazy, but the majority of people just don't do it yet. So all the money that is held at a wallet or an exchange, there should be a certain level of verification and not just, oh, trust me, I'm Brian Armstrong, or trust me, I'm Fidelity. That's insane. The technology is there. So avoiding it to me is, I don't want to say malicious, but it's certainly financially irresponsible. So I think while we're at the first inning of what will be this bull cycle, I think we'll see a lot more innovation in terms of not only custody setup, a lot more auditing and regulatory protections in a good way for companies not to go rehypothecate that do protect Bitcoiners in the investment class.
It is a big orange pilling moment, though, because they're still in that yielding mindset. They have Bitcoin and it's a dead asset. They need to force it to create yield. What they really need to understand is that you get paid yield in Bitcoin when you borrow against it, because you're getting paid in terms of purchasing power. So the value, in other words, let's say you have a mortgage payment and it's $2,000. Well, 15 years from now, you might be able to pick $2,000 up off the ground and then walk into the bank and make your mortgage payment. Well, see, that's not a risk to the borrower. That's a risk to the lender. And what we need to do is we need them to understand that you don't take Bitcoin and generate yield with it. You actually empower yourself by borrowing against it, and you get paid yield in the terms of purchasing power. And that's the big orange pill. I think that's the next big orange pill for the world.
That's a good point.
Yeah, I'll add to that, actually. A lot of people, when you think of like a Bitcoin bond or a Bitcoin collateralized loan, you think, okay, well, I actually have to fund it with Bitcoin. With the technology, you can do dollars over Lightning. You can actually go buy a bond with fiat currency, have the APIs to convert it into Bitcoin, and you're able to either take advantage of, maybe it's the rate or the flexibility, the immutable money and 24/7 liquidation, whatever it might be. But there's a lot of technologies out there, like, for instance, Strike does something awesome. Where they'll do dollars over Lightning in real time, and you can set it all the way over the world in, seconds using Lightning and settle in native currency. That, to me, the inroad for that could pull, if these bonds or these mortgage auctions that are going to come through, if the rates are promising, you're going to be able to get a whole new class of people that are not typically Bitcoiners, but they're just chasing rate, whether it's APY, be able to get, better returns, or lower APRs to be able to live their daily lives.
Well, the Fed is fighting this battle, right? Where they're like, how do we get rates lower? I mean, they literally have lowered rates and the 10-year has gone up. It's done the opposite of what they wanted to do. Well, how do you get sustainably lower interest rates? You integrate the most pristine form of collateral in the world. That's what you do, because it reduces risk. In a free market, it's not just the supply of money and demand of loans, it's the perception of counterparty risk. That's why you have a credit score. The credit score is supposed to gauge your risk to the lender. Well, now when you add Bitcoin as that added layer into the product, you reduce risk, which means you can reduce the rate sustainably. So this is the solution that they're looking for. They just don't know it yet.
Yeah, I think it's good you brought that up because, people think of, okay, Bitcoin as the asset, right? But it's also a payment rail. You can also move dollars or other assets on top of that. So that's another thing that it's potentially useful for. And it's kind of interesting to see with the intersection of, traditional finance and Bitcoin, that you can separate out the properties and the price exposure of Bitcoin as well. That some people might want the price exposure of Bitcoin, but without those unique, self-custody pros and cons, right? So that's where the ETFs can be useful for those people. And then also, right, there's companies that they can't just buy whatever they want, right? So there are companies that they can buy certain things that have Bitcoin exposure, not others, right?
Some companies are just forced to lend. So they have a mandate where they can't even invest. They need to lend their money. So this Bitcoin bond product is a solution for them because now they can lend into Bitcoin. You can get exposure to Bitcoin without being forced to invest. And then when you have a principal protected note that eliminates downside volatility, now you talk about the small and medium-sized businesses. A lot of people thought the ETFs were going to be like, oh, once they get an ETF with a qualified custodian or with BlackRock, the businesses are going to start adding Bitcoin to their balance sheet. But for anybody who runs a smaller, medium-sized business, a lot of that revenue is being spent back into the business to hire employees, expand, take advantage of certain opportunities. But when you put it in Bitcoin, all of that revenue is now untouchable, right? It becomes locked equity. And how do we unlock that equity? By fusing it to give you the best of the both worlds, of the treasury and of the Bitcoin. And then add on top of that the ability to post it as collateral. Now you can do that same business expansion without actually giving up the equity on your balance sheet, and then allow the cash flows to pay down the debt. I mean, this is truly the future of finance.
So I've told people you probably want to get Bitcoin before the ETFs as opposed to after, right? And okay, well, now we have ETFs, so I'll just tell people, hey, you probably want to get it before the strategic Bitcoin reserve buys them as opposed to after, right? And is it that easy that, everyone can see that it's coming and you can essentially front run this purchase because, again, large entities can't move as fast? Is that what's going to be the case, or is it just more in terms of the legitimacy that you get from these products and okay.
I mean, to me, at People's Reserve, we believe after the strategic Bitcoin reserve narrative kind of dies down a little bit, this is the next narrative. This is the real bull market narrative, the fusion of Bitcoin into traditional credit and debt products. This is what's going to carry us forward after the excitement of the strategic Bitcoin reserve really starts to settle down, because that's just step one. Once you have your strategic Bitcoin reserve, what do you do with it? How are you empowering your constituents with it? What in the world do we have? What tools can we use to empower ourselves with the responsible saving that we've been doing? And this is the next natural progression into how you can utilize this amazing engineered money to empower your balance sheet, your constituents, anything really.
Cool. So of course, one of the concerns now people see is, okay, you have these large entities that have a lot of Bitcoin, but then they think, okay, do they, right? Is there a way to tell if these large entities have all the Bitcoin that they say they do? Because if it's not a fractional reserve, prove it, right? Xander, any thoughts on it?
Yeah, absolutely. This is like I think a big thing that, proof of reserves is as sexy as talking about the more boring topic in the world on its face. But I think why it's so important, and again, I kind of alluded to this a few minutes ago, but all these institutions, whether it's the ETF, the custodians that are holding it, these corporations that are now, like the MicroStrategies of the world, the proof of reserves is built into what Satoshi originally created. So it's not something that we have to go recreate. It's just the utility behind it allows for the existing investor protection. So when we do it at Hoseki, we do the institutional proof of reserves for a lot of the Bitcoin ETFs. We work with several institutions that own Bitcoin on the balance sheet. There's a couple, key factors with proof of reserves. A lot of times companies do not want to be sharing their public address because if you think about, OFAC sanctioned personnel or countries, they could get dusted and next thing you know, you're in a whole world of trouble. So how we do is we cryptographically prove, just like you would on any block explorer, and you can just, check the blockchain for a wallet address. We basically verify it cryptographically, we do message signing, and then we are able to, showcase that data without, showing the address of each individual account. So we're able to protect that way. But I think, there's a lot in this with the Bitcoin bill that's coming out that will, have this third-party attestation. And a lot of people say, oh, what about the accounting firms? And I just say, you mean the same one that, audited FTX? So, there is a layer of it being, okay, like there's not so much trust in the system from the traditionally trusted resources from traditional finance.
Yeah, when there's the big Bitcoin conferences, I wish they could just say to everyone, hey, when you're walking in, just write down the number of Bitcoin you think you have on a piece of paper and put it in a bucket, and let's add it up and see what that comes to. Because we know there were some entities that didn't have what they said they were supposed to, but you're saying you think that at least the ETFs now are more.
Yeah, I'll start with the ETF. So we work with a handful of them. A lot of the companies now are moving forward. We work with, for instance, MetaPlanet. We partner with them to do their proof of reserves. And we're seeing a whole slew, like the more corporates that come on to, whether it's the Bitcoin standard or just having Bitcoin on the balance sheet, they realize that not only is it good if we're going to make this move, it's the right thing to do in terms of if we're telling investors we have this and we can show it, why would we not? And then also, you go all the way down to you as an institution that wants to lend against it, you all, if you have Bitcoin, you have, the superior collateral. So what's the best way for you to attest the ownership of the thing you have without, giving up private keys or doing anything like that? You can do a message sign and then you can go get collateral, or you can get, a better credit score. So I think all this is coming in this wave. And it's just going to unlock a ton of value, things like institutional bonds, all the way down to peer-to-peer lending, or you just being able to, essentially take a HELOC out on your Bitcoin.
So in 2017, there was a company that changed its name to Long Blockchain to try to get a stock boost and ended up getting in a lot of trouble for that. But then what we've seen in 2021 and recent bull market is companies adding Bitcoin to their balance sheet. And that's actually seems to work out pretty well for them, right? It's working out well for MicroStrategy, for MetaPlanet, for a number of other companies that are doing that. So do you think, there are other companies that are going to copy this at some point, especially larger companies, or either like a little bit, or, if they're not going to try to become like a Bitcoin ETF in effect? Yeah, no,
I think that you will see a lot more corporates coming on board to either just park a little bit of capital of their reserves in there. Again, because everybody's just sitting on dollars. I mean, it's inflating away. We've printed 80% of every single US dollar that's ever existed in the past 5 years. So by holding an asset that is a fixed supply that price is usually dictated by supply-demand economics, but when you don't know the supply of an asset, it's very difficult. But Bitcoin has a fixed supply. So what dictates price is going to be the demand. So you hear nation states, you hear corporates, you hear the U.S., all these things. Guess what? Outside of this room, most people still do not know the difference between Bitcoin and Ethereum if you go to any room, or Bitcoin and Solana or Trump coin and any of that. So I think relatively it's still early, but I think this adoption curve is going to be extremely quick in the next 6 to 12 months. So I do think there'll be a ton. You'll see a lot more common Bitcoin treasury holdings for S&P 500 companies.
And Tesla, which is in the S&P 500, has Bitcoin on the balance sheet, not Dogecoin, Bitcoin.
Right.
Yeah. So, people might joke around, but I think maybe ultimately when they're making those billion-dollar decisions, they do some due diligence, right?
Absolutely. Yeah. I mean, just by the, Bitcoins as a reserve asset is significantly superior to anything else that does not have a, who goes in and changes the monetary, policy behind Dogecoin.
Well, it actually it was changed from finite to infinite a number of years ago. Yeah.
Something that you said that caught my attention is the natural laws of economics and price discovery on Bitcoin. So typically, the way that you increase supply is that the price goes up of the good or service, and that creates a profit. And then that profit is actually the free market price signal to entrepreneurs so that they can deploy resources in order to capture the profit by expanding supply. But in Bitcoin, you cannot expand the supply. And then, so the only thing that you can do to convince people to let go of their Bitcoin is to offer a higher price. But with the tools that we build at people's reserve and that are going to be popping up everywhere, when you can borrow against your Bitcoin, it's kind of like Michael Saylor. When the price goes up, what does he do? Well, he makes more offerings and he buys more Bitcoin. So you literally cannot use the natural laws of economics to incentivize supply coming onto the network, because the only thing you can do is do a higher price. But when you have the proper tools to borrow against your Bitcoin, that higher price, it just empowers you. It doesn't incentivize you to sell. So I think when these bigger institutions figure this out, we're going to go into a repricing event. The commodity cycle that we're used to is going to disappear, and this diminishing returns theory is going to be put to rest. And we're going to have an absolute repricing event based on the fact that there's nothing anybody can do. There is no law of economics. If you know of it, please let me know. There is no law to incentivize selling of Bitcoin. My concern would be this. Be careful when you go to Bank of America or any of the big dogs in the industry to borrow against your Bitcoin, because the only way they can get your Bitcoin is if they drive the price really high up and let you borrow against it and then let the price crash and they force liquidate you. So this might be the only method to actually capture Bitcoin from the marketplace. Be careful of that and make sure your counterparty is putting you first instead of themselves.
Yeah, that's a good point. I mean, we saw with March 2020 where Bitcoin dropped more than 50% in a single day, where even if someone thought, I have enough Bitcoin, I didn't use that much, I didn't take out that much against my Bitcoin, they could still be potentially liquidated at sub $4,000, right, when they borrowed at 8,000, and then they just miss out on the price running up to 69,000, a year later. So yeah, that there is leverage there, and maybe that's somewhere where it would be helpful to try to combine it with some other collateral, right? Whether it's combining the Bitcoin with the house or combine it with derivatives in such a way that it prevents those.
That was a really good idea.
Swan assets. Thank you.
I could see that becoming a major thing in the next year. Definitely using your Bitcoin as collateral, because if you can't get yield against it, but you can use it for something in your life, that's going to be epic.
Also, people realize, okay, not everyone can use Bitcoin for every single transaction, right? You can't all just buy your coffee with Bitcoin, but then Bitcoin has a number of layer twos, right? So for example, there's Lightning, there's Liquid, there's other ones being developed. Does anyone want to talk about what layer 2 is for Bitcoin and which ones they're excited about?
Well, I think it's important when you talk about layer 2s for Bitcoin to understand that different layer 2s solve different problems or different functionality, and they're like radically different, right? Is it Bitcoin Drano that helps move transactions down to a lower layer? Right, that's something like Lightning. Is it smart contract resolution? or what is it you're looking to do? So I think there's 75 layer twos now, and there's about 450 million invested into them, but they're solving different problems. So to me, I think if you kind of have a Bitcoin scorecard, it's always kind of at the top, and then you get to utility. Utility, even though it invented it quite literally, and there's all these things you can do on the ledger, I think it's, needs improvement, if you will. So I think there's a lot of innovation that could touch people's daily lives, from a ride-sharing app to tracking counterfeiting of or tracking your food and whether it's organic to your table, and that can be done through smart contract resolution. And it's something that Ethereum's done rather well in comparison to Bitcoin, and then obviously falls short in others. So I'm really excited about layer twos that allow the strength of Bitcoin as a network to do more for people who would otherwise never have anything to do with Bitcoin or really know about it.
Anyone else want to touch on that?
Yeah, for me, I've always really gotten excited by, making the on and off ramps internationally more accessible. So, Bitcoin in the US has a certain meaning. We know it as this reserve asset. But if you go to another country that has, 80% inflation, this is something that they either go after work and buy, a Rolex so that they can maintain their actual, the value of what they just spent 2 weeks working for. Or you can now buy Bitcoin, which, obviously is this, beautifully protective inflation hedge against maybe a highly volatile currency. So for me, the on and off ramps, especially the work in Lightning, I think a lot with the industry, a lot of these conversations a couple of years ago were always talking about disrupting, let's take down Visa, let's take down MasterCard. And I think what we started to realize is that the rails are extremely efficient in terms of being able to either, you could pay for something with Lightning, instant settlement, no fee, whatever it might be. So you take interchange down from 4% down to 50 basis points immediately. However, changing consumer behavior is very, very hard because your credit card is the best consumer experience you could ever have. You get points, it's protected, you could spend it anywhere, there's no internet, all of it. So for me, I think internationally, things like remittances, global payments for institutions, it's a humongous market. And I think that will be something, whether it's, in the next year or two, or maybe it does get pushed a little bit further out with all this, everything happening on the institutional, reserve side of things. But that to me is something, the Lightning use case and, on and off ramps for foreign currencies.
I didn't really, sorry. Were you going to say something? I didn't really understand, growing up in New York, I didn't really understand hyperinflation and that money could be really debased and used in a very negative way. And I always kind of externalized that and said, those are third world countries. Those are places that can happen. And then there was a Bitcoin conference in 2013 in Argentina. And people prepared me. They said, you have to bring a lot of dollars with you. Credit cards won't work. Someone's going to come to the hotel every week to change over the money. The prices are going to be changing on the menus every single day. They explained that the money there is more fluid. It's used as a medium of exchange, not as a store of value. And I said, what do you mean? How can money be a medium of exchange and not a store of value? That makes no sense to me. As soon as you get it, you want to sell it for something else. Most Argentinians, I went down there and I'm like, wow, this is a beautiful country, first world 5-star hotels. But most citizens there needed to have dollars in a United States bank account or go to Uruguay or somewhere like that right next door. And so when you use Bitcoin and you talk about the Bitcoin rails and you go to Argentina, you go to anywhere in the world and you can use Bitcoin as not just a money to spend something daily, but if you move your family and you want to start a construction business, how do you get a line of credit in a foreign country? Let me deposit some Bitcoin as collateral. Here you go, sir. Start your business. This is not just a money, but this is a global asset that has no holding costs. You put it on your balance sheet. Sure, real estate and properties, they're phenomenal. You can live in them. That's the major thing. You need shelter. But it costs a lot of money to maintain real estate. Bitcoin, you can keep it on your balance sheet. And although you don't get yield, every year it should at least go up by the value of inflation.
I think, there's an economic law. It's called Gresham's Law. And the way it works is that, think about when you were like a little kid and you had trading cards. And, this guy has a beautiful holographic trading card. And you have a holographic trading card too. But you also have all these regular trading cards. And you think to yourself, okay, maybe I'll offer him 10 of my regular cards for his one holographic card. But in your mind, what you're really doing is Gresham's law, which is you want to keep your holographic card and get the other important holographic cards by giving up what's less important and less valuable. So for me, I don't think you should be spending your Bitcoin. And I think L2s are going to be more about settlement. We heard in the mining discussion that eventually the tax that you need to pay to get on that toll road is going to be very, very expensive. Right now, it's pennies on the dollar. You can send billions for $1. But in the future, when there's a lot of demand on that toll road, we're also going to need settlement on that secondary layer. But you're never going to spend it. It's only going to be for settlement. I think that's the real long-term thing here. And Bitcoiners kind of get off track by focusing about monetary velocity of Bitcoin. I got to be able to spend my Bitcoin. No, you don't. You got to be able to do what Charlie just said. Post some Bitcoin as collateral and spend those crappy non-holographic cards on what you need to live your daily life, and keep the holographic card, keep the Bitcoin, keep the most pristine form of collateral in the world in your possession. That is like the future of L2s for me.
Yeah, and I was in Argentina last year, and the ATMs still don't work. So Bitcoin as the payment rail, Bitcoin as store of value. It's a lot easier to wrap your head around it when you're dealing with inflation, when you're dealing with a monetary system that just doesn't function, right? If you're in Naples, Florida, those might be alien concepts until you go to some different places and you realize it's not a niche thing. It's actually billions of people that are dealing with these problems.
There's a value in just like when you travel somewhere and if you're going to go on a vacation or a work trip or something, and usually would want to take some money with you. Traveling with cash is becoming increasingly scary with the crime and traveling, on a customs and everything. It's just, you don't know if they're going to rip you off or take your money and everything. So the idea of being able to travel with Bitcoin anywhere in the world, and the ability, and it's right there.
I'm just curious who here has used Lightning. If you could put your hands up. All right. Yeah, that's actually pretty good. All right, I wanted to open it up for any questions if anyone's asked the panel.
How does that work in terms of
Yeah, so the question is, if the lender, is the lender really taking possession of the Bitcoin, or is the Bitcoin staying with the person who's borrowing it, or how does that work in the event that they don't pay?
There are conditions. Usually it's like a 70% loan to value type of situation. And a lot of the good ones now have these multi-signature setups where you have a key, they have a key, and it goes even further that it's set up in a way where if the price of Bitcoin goes below a certain number, they can sell a certain amount of Bitcoin to keep that loan to value, or you can deposit external money. And it's all like really, I used an app years ago I didn't really believe in borrowing against my Bitcoin. I just used it. And I just took out a loan against my Bitcoin, and I specifically just paid every time the price went up, it covered what I owed for that month. I just kept paying it. I never needed to pay back the loan.
I think the other thing is to answer that question is that the typical strategy that we see right now, that's the risk that I was just highlighting a couple minutes ago. They want you to have what they call a crypto credit line taken out directly against your Bitcoin. So when the price goes down, they can force that liquidation on you and capture the Bitcoin. That's why it's so important for Bitcoin maxis to build products that eliminate liquidation risk. So specifically in our loan product, you're not borrowing directly against your Bitcoin. You're in the mortgage product, there's a lien on the property. Your cash flow matters. You're posting Bitcoin as additional collateral to lower risk. Huh? So even if the price of Bitcoin goes down to 0, which it will not, but even if it did, you're not going to get liquidated. What happens is your interest rate starts to gauge up. So instead of having a prime minus rate, now you're going to be back at the prime rate again. So that's what's so important for people to understand. You're not borrowing directly against your Bitcoin because that's going to create the liquidation risk. That's what we're trying to avoid for you. We're empowering you by separating it and making it an extra component to the contract that allows you to attain a lower interest rate due to reducing the risk of the lender.
Another question over there.
Pretty cool, actually.
Yeah, it's really cool. Yeah, the website.
Yeah, what is the website? peoplesreserve.com?
Well, we've been building in stealth because we don't want to lose our first market.
No, that's a great idea.
Yeah, we just have,
Yeah.
well, yeah.
So you'll just see a beautiful...
Turn off the live stream, please.
and that's it.
That stays here. Great call.
Yes. Last question.
It's like the magic part of this. Everybody's heard this saying, right? Money talks.
Yeah.
So we don't really care about your credit score. What matters is how much Bitcoin you're bringing to the table. And that's the paradigm shift. The paradigm shift is when you go to a TradFi institution, they want to know your credit score. They want to know your cash flows, your businesses, everything about you. But then they don't even give you real credit for it. Like she just asked a question. I'm not sure if everybody heard it, but this person has millions of dollars worth of assets and they can't get access to credit because of some other reason or another. That's a hiccup in the traditional system. When you come to a Bitcoin lender, Bitcoin talks, money talks, you put Bitcoin up. So yeah, the solution would be convert that equity into Bitcoin, and now you can get access to credit.
Yeah. So
It would be cool. Sorry.
sorry, go ahead.
You go ahead.
No, I was just gonna wrap it up.
I was going to
At a time.
Oh, sorry.
Yeah.
You go.
I was going to say one thing. So, under this world of proof of reserve, so at Hoseki, what we actually do is we do proof of funds for individuals. So we'll actually do the same level of cryptographic signing, whether you're in cold storage, wherever you're holding your Bitcoin, and then you can use that as a proof of funds to then go be more creditworthy or use it for underwriting, whatever it is. So that's very much the case. What we're saying is we have a lot of people that have Bitcoin, they come to us, and we've been doing this under the hood, but now we've productized it.
What's your website?
It's hoseki.app.
Great. All right. Thank you so much to our panel here.
Thank you.
Me. All right, she got